Howdy friends, Corey Moser with your mortgage and economic update for Friday, January 23rd. Fed week is actually next week, but there hasn't been a lot of talk about it, primarily because there is no anticipation that the Fed will be cutting rates next week. In fact, uncertainty tied to Trump's policies are pushing treasury yields higher, and it's creating some headwind for mortgage rates. So we may have actually already seen the lowest point that we will have rates this year. There aren't any anticipated rate cuts coming, and if inflation numbers prove to be where we think they'll be, this may be the lowest point at this stage of the year. So if you're considering a refinance or a purchase, this is probably the optimal time to take advantage of that, especially before the spring housing market hits. So if you're a buyer, consider purchasing now. If you're wanting to refinance, consider doing so now. Those rates are at the lowest levels that we've seen in nearly 3 years, although this has been a rough week for mortgages. They're up this week. So the national average for a 30-year fixed rate is 6.19%, and the treasury, the 10-year treasury yield is currently at 4.259%. Look forward to talking to you again next week. Have a great weekend.